Hello, hello, hello. What's going on, everybody in the YouTube world? Welcome to the first Capital Hungry Market Update and Trade Ideas webinar of the new year, 2023. How's everybody doing in the YouTube land? Can you guys hear me loud and clear? You should be able to see just the gold screen on the hourly time frame, plus my face in the corner, plus you can hear my voice. Just want to make sure it's my first stream. It's my first market update and stream in like a few weeks or a month, right? Because we were coming off the holidays and then we are just starting the new year. So I wanted to make sure no technical difficulties. Okay, so during this webinar, first we're just going to go through key fundamentals in focus, what fundamentals are impacting the markets, economic events to come, analysis and trade ideas across the board on gold, GBPUSD, EURUSD, USDCAD, stock market index US 30, and GBPJPY, doing some market sentiment analysis intertwined with that. And then at the end of the webinar, I'll be using some random, fucking bright as hell. I'll be using some random generator here to pick a winner for the $1,000 Dominion Markets account giveaway. So if you haven't entered that contest, you have a chance to enter it right now before this stream ends, which you have to enter on Instagram on that Instagram post, right? So we're doing $1,000 Dominion account giveaway, $1,000 USD, where I personally already transferred the money for that deposit, and then it's already set to go once we announce a winner. All right, but let's jump into the main focus point of this webinar, being the analysis, fundamentals, technicals, trade ideas, and more. So in terms of fundamentals, the main reason why dollar has been more bearish to start the new year, why gold has been more bullish and stock market has been more bullish, is overall the market pricing in higher probability of a Fed pivot. Gold bullish and US 30 bullish is improving CPI reports from the previous months prior to this new year, and bad economic data fueling recession scares and Fed pivot narrative, hoping that either one, continued improved inflation reports will lead to the Feds to pivot, or number two, economic data will continue to weaken to such a point where recessions will get so bad that the Feds will need to stop their rate hikes, pivot, start cutting rates, and supporting the economy again. This is the main reason from the end of last year into the new year, gold has been bullish, dollar has been bearish, and stock market more bullish, while currency pairs against the dollar such as GBPUSD and EURUSD more bullish as well. Last week specifically, on the Friday, we had very, very bad non-manufacturing PMI and factory orders data from the US. Now, Friday, we also had the non-farm payroll, unemployment rate, and wages data. NFP was mixed, where it was better than the expected forecast, but worse than prior. Unemployment rate was good, but wages data was poor. So from about 8:30 a.m. Eastern on the Friday till 9:30 a.m. Eastern, gold and dollar did liquidity grabs, but just relatively started to range, when I'll show you that exact example here. So when we're looking at gold here, highlighted in the yellow box, this was NFP, where the labor market data with NFP overall in US labor market was mixed. Bad wages, decent NFP, good unemployment rate data, right? This led to gold doing a liquidity grab, spiking up to the 1850s, but then the following hour also having a pretty large correction and coming down to the 1840s. the main reason why gold went bullish and printed new intraday highs and dollar went more bearish, as well as the stock market went more bullish, was after NYSE on the Friday, we had very bad US non-manufacturing PMI and factory orders data. That was way worse than forecast, way worse than previous. This increased the likelihood of a deeper US recession in terms of what the data is telling us, and also had the markets pricing in a higher probability that the Feds will pivot. A lot of people were confused and they messaged me on the Friday saying, Jeev, I understand that bad US data would lead to dollar weakness and would lead to gold upside, as gold is a safe haven, but why is the stock market going bullish if US data is so bad? It's because the stock market is pricing in, and these other asset classes, they're pricing in a process. Whenever you have bad economic data, the market isn't pricing in that bad economic data itself. So let's just say we have an event come into play, which is bad US economic data. The market isn't just pricing in that data, the market is pricing in that bad US economic data means deeper US recession, which leads to higher probability and hopes that the Feds will pivot. Bad US data, economy can't handle rate hikes, hopes of Fed pivot. What gets priced in during bad US economic data is actually this, the hopes of Fed pivot. The impacting factor of the hopes of that the Feds will pivot supports the greedy stock market narrative and leads to this impact on the market of weaker dollar, bullish equities, bullish gold and other asset classes, right? So this is what got priced in on Friday when we had extremely poor non-manufacturing PMI data, and of course we had very bad factory orders data. The market was starting to price in a higher probability in hopes of Fed pivot, hence dollar went bearish, gold bullish, and stock market bullish, and that sentiment is still holding the most weight into this new week. This is why gold is still holding this bullish market structure and having buyers print these consecutive higher highs. Now, this is a key reminder that I want to give to everybody for trading this week. For the time being, when I give you guys trade ideas, these trade ideas are going to be specific to Asian session, London, and pre-New York hours, where I'm still looking to extend the same sentiment and continuation of Friday's moves. Dollar weakness, gold bulls, stock market bulls. But this week we have two very important fundamental catalysts in focus for the US that's either going to extend gold buys higher or start to have dollar domination come back into the scene. Quick pop quiz to the YouTube audience. What are the two main focus points for the US from an economic perspective this week? One is tomorrow morning, and then the other one is midweek. One of them is more of a speech, and the other one is a pre-planned event and data report. So, good job, YouTube audience. Everybody's getting it right. It's Leak, Jack, Locksmith Beats, Usman Khan, Joshua Frizz, Tony. Too many names. You guys got it right. So tomorrow morning, 9 a.m. Eastern, we have Jerome Powell's speech. Then the following day or two after, we have the US CPI. For us to continue a bullish bias on gold into tomorrow after Jerome Powell's speech, he will need to have a neutral to dovish sentiment, meaning he's not bringing any new events to the table. He's not giving any signals towards the next rate hike. He's not talking about more rate hikes to come. He's saying everything is data dependent, and he's saying inflation's still too high and giving the same type of information. This can lead to gold just doing a liquidity grab and still continuing bullish, and dollar doing a liquidity grab and continuing more bearish. Okay? But the main focus point this week is US CPI data. Now, the main reason that gold, not even just from the start of this year, the main reason why gold has had this extended relief rally, which I described to all of you in the free webinar that I did with the 2022 yearly review and 2023 forecast, is we have various catalysts during this time period from 2022 November to current date that are fueling Fed pivot prayers. Fed pivot sentiment. We have had improved CPI reports, bad US economic data, neutral Feds, no new events, right? So ever since November, that last FOMC that was priced in, we started to get bad US labor market data. We got the CPI report being improved, another CPI report being improved, bad US data with the PMI figures and manufacturing, and even that still continuing the sentiment so far. So for us to continue this sentiment of Fed pivot and continue gold bulls to the upside, whether we get pullbacks to 1860s or the continuations above 1880s, this week, you're going to need two different things to take place. One, you're going to need a neutral to dovish Jerome Powell speech. What would give you confirmations of a neutral to dovish speech? He just says the same shit, copy and paste as the last FOMCs and last speeches. He doesn't talk about specific numbers for rate hikes to come. He doesn't talk about how many more rate hikes. He doesn't talk about how much they need to keep rates up for in terms of the time period. He doesn't bring any new events to the table. It's a copy and paste from previous FOMCs or previous speeches, right? Two, we're going to need to see continued bad US economic data that also continues to leave dollar more bearish and gold more bullish as the markets price in deeper recession scares in hopes of Fed pivot. Three, the CPI report this week has to be improved. If the CPI report is not showing improvements or just not relative or still not relatively neutral, meaning just hovering around the prior figure and inflation is high, this can start to bring gold bears back to the table. So for us to continue gold buys, dollar bears, GU buys, EURUSD buys, and stock market buys this week, you need one, a neutral to dovish Fed speech. Two, other US data outside the CPI to still be bad. Three, CPI to be decreasing and showing signs of improvement. If we get those confirms, we're just going to continue the bullish market structure on gold. We're going to continue the bulls on GU, bulls on EURUSD, and dollar still going to be weaker for the time being with no confirms of dollar domination back to the scene yet. Now, let me give you guys another pop quiz, right? If those are the reasons that we need and catalysts to keep gold bullish, improving CPI, bad US economic data, neutral to dovish Fed speech with Jerome Powell, what are the catalysts that we would need this week to have dollar domination come back into the scene and for gold to start flipping bearish again on the higher time frame? So let's just say gold comes to this very key liquidity zone around the 1880s, doesn't break higher. What fundamental catalyst specifically this week would we need for gold to start flipping back bearish again? Listen up. I gotta say one thing for the new year of 2023. Capital Hungry's YouTube audience is not a gulag. Capital Hungry's YouTube audience is high IQ. I've made you guys, I'm not saying I'm taking all the credit, but I think Capital Hungry content has increased all of your IQ a lot. Because you guys are right. Adele, Gerald, Nathan Mendoza, Gerald, Jacob, James Lockett. No, not good CPI, high CPI. So for us to see dollar domination come back into the scene, aka dollar strength, gold bears, and stock market bears, we need a hawkish Fed speech and we need a high CPI. We need high CPI, right? So let me give you guys the main scenarios for this week dependent on data and how to play it accordingly. Right now, in the example of gold, and I'll talk about the other pairs as well. Right now, gold is starting to dig into a pretty key liquidity zone when you're looking to the left here around the high 1870s to low 1880s, right? For us to follow this yellow pathway of price and continue gold more bullish, we need to see these confirms corresponded in yellow this week. We need to see and this will be the correlation confirms for you guys to look at sentiment as well. So for gold bulls this week, just having a pullback, maintaining this bullish structure on the intraday time frames, continuing to print your higher highs, trending higher into the 1900s, the fundamental catalyst we will need is neutral to dovish Jerome Powell speech, improved, decreasing, or the same CPI as last time, not increasing. Other US data, bad. That supports Fed pivot prayers narrative. Confirms of that is also watching technical dollar weakness, right? But what you guys have to understand from an economic perspective with inflation is one very key thing. Over the last 2 months before the end of the year, we had very strong economic and market optimism to keep consumer morale, consumer activity, and investor activity up into the holiday season for North America. We had lack of recession scares. We had more optimism in the stock market. We had improving CPI reports. The news was telling the general public, go out and spend, go make your holiday great, go have a good dinner, go eat more food, go indulge more. Everything in the economy is okay. That surge in holiday spending from a seasonal perspective, as well as from an economic perspective of how 2022 has ran, can lead to the January and February inflation reports starting to go up. We may not see this inflation report starting to be up right away, but come the next report next month, I personally think inflation's still going to be high again due to that seasonal spending and economic catalyst stated, right? But this week, tomorrow morning, Jerome Powell speech, 9 a.m. Eastern. If he just has a neutral to dovish speech, he doesn't talk about the size of more rate hikes to come. He doesn't talk about the timeline of how long they're going to keep rates up. He doesn't bring any new events to the table. It's copy and paste from his previous speeches. That can be taken as neutral to dovish, as it takes a lot more for the stock market to be bearish rather than to be bullish, right? It's way easier for the stock market to be bullish rather than bearish. So any type of catalyst that feeds into Fed pivot prayers and the hopes that the Feds will stop hiking rates and reverse their rate hikes, that just has stock market buyers fueling into it based on greed. Even though recession scares are worsening, even though macro inflation is still high, greed is a very, very strong human psychology factor in play here, as that is the main driving factor behind the central bank support. The main reason the stock markets were so bullish during the pandemic, even though the people were suffering, even though the people lost their jobs and small businesses were destroyed, was the cartel of the currency, the Federal Reserve Central Bank, increasing the money supply, having rates at zero in very favorable investing conditions, and pumping the markets, right? So the greedy stock market buyers, they don't want to let that phase go. They want to keep pumping the markets, keep trying to squeeze as much as they can, and that's what we've seen take place with the Fed pivot prayers, right? So if we have these catalysts, neutral to dovish Fed speech, improved, decreasing, or the same CPI, other US data is bad, dollar's still going to be bearish, gold is still going to continue to chug away bullish. But the only way gold is going to start to turn bearish now, rejecting these 1880s area, breaking this bullish market structure, and starting to turn bearish on the higher time frame, is these catalysts this week. Hawkish Fed speech, high CPI. If we get a very hawkish Jerome Powell talking about the size of more rate hikes to come, talking about keeping rates up and confirming to keep them up through 2024, talking about that they're not close to defeating their fight on inflation, that inflation's still very high, and the CPI report this week is already starting to show us an increase and is higher than expected, that's going to bring back dollar strength and gold bears. Does that make sense for everybody? So what I'm telling you right now, this isn't the information for the trade ideas for Asian session, London, or for scalps tonight. I'm just trying to give you guys extra bonus information for the rest of the week of what you need to look out for. Now, this same type of price movement is the exact same thing on GBPUSD and the same thing on EURUSD. Same thing. For GBPUSD to continue more bullish, for EURUSD to continue more bullish, we need the same fundamental confirms. A neutral to dovish Fed speech, improving and decreasing CPI, other US data being bad, still holding above previous range break of 1.21. The only way GU will turn bearish is for these same fundamental reasons. Same thing on EURUSD. Same thing on US 30 as well. The fundamental reasons for gold to be bullish, stock market to be bullish, GU and EURUSD to be bullish this week, the fundamental reasons are the same. And the fundamental reasons for those currency pairs or asset class like the equity markets or asset class like the precious metal like gold, that's the same fundamental reasons as well. And also good point by XAUUSD is also good US economic data to throw in here. Good reminder. Thank you, Mr. XAUUSD. Good US data. That also supports this bearish sentiment. Mr. Mukhtar Yaqib. Jeev, what if we get mixed information? What if we get that Jerome Powell's very hawkish, but CPI still improved? More than likely, you're going to have more. So let me show you the example on like equity or gold here. Let's just say tomorrow we get a very hawkish Jerome Powell, but then the CPI report is still improved. You'll have a very aggressive downside move like this. Improved CPI would spike us up like this. Then we're just going to start to range. This is where you're going to have fundamental indecision for the week. Two catalysts that are conflicting each other. You'll still probably more than likely maintain this overall structure, have a heavy downside move, fail to break back below the 1800s and 1820s, but then just end up ranging for the remainder of the week if we get mixed fundamental catalysts. Does that make sense, everybody? So the first half of this webinar was just a little bit of prep work. The focus points this week, which is Jerome Powell's speech tomorrow, 9 a.m. Eastern, and then US CPI later in the week. Other than that, not much else is really that important this week. For GBP, we do have some GDP data in manufacturing later in the week, but not much else is going on. Now, I'm going to give you guys the fundamentals that are currently holding the most weight and trade ideas for Asian, London, and pre-New York. But New York is going to be dependent on Jerome Powell's speech tomorrow morning. All right, so now let's just run through our normal stuff. So in terms of recent fundamentals, the main reason from Friday to this new week why gold has been more bullish and dollar more bearish is that bad data is leading to recession scares in hopes of the Fed pivot. Terrible US non-manufacturing PMI and factory orders data from Friday is supporting that Fed pivot narrative. So for the time being, for Asian session, London session, and pre-New York, I'm still going to be looking to play pullback gold buys, pullback GU buys, pullback EURUSD buys, pullback stock market buys, and USDCAD sells. But then everything is going to be data dependent on Jerome Powell's speech at 9 a.m. Eastern tomorrow. Does that make sense, everybody? So we may see that because the markets are waiting for Jerome Powell's speech in the morning, because we have US CPI in focus, don't be surprised in terms of your volume and volatility expectations that if the markets are slow and ranging over Asian, London, and pre-New York. If we still get healthy volume, that's great. Even better for us to take some good scalps in day trades. But if the markets are ranging, don't be surprised at all. You know that the main market liquidity is more just sitting on the sidelines, waiting for that fundamental catalyst. That's Jerome Powell's speech and the US CPI data, right? But the trade ideas I'm giving you right now and the analysis I'm giving you right now, this is just for Asian session, London session, and pre-New York if we have healthy volumes. Then depending on Jerome Powell's speech, follow the advice I gave to you the first half of this webinar. If the speech is hawkish, you're going to see gold bears and dollar bulls. If the speech is neutral and dovish, no new events, we're going to see continued gold bulls and dollar bears, right? So we're still going to be looking for this next Asian session, London session, and pre-New York to still be extending the dollar weakness sentiment and bad data from Friday impact as Fed pivot prayers are holding the most weight, but have high expectations that the markets may be slower in terms of volume, potentially ranging until we get the more important data coming into play. The main focus this week is CPI and the Fed sentiment from Jerome Powell. We're still very early into the business year. In terms of market sentiment, we still currently have dollar more bearish, yen rejecting key sell side higher time frame liquidity zones and just ranging, and the stock market more bullish on hopes of Fed pivot as described. You can see that here across the board when we're doing our individual market sentiment analysis. We still want to look to play, for the time being, up until the Jerome Powell speech, dollar weakness with potential revisitations of 104 and going lower to 102 or 101. Yen is still bearish on the higher time frames individually. When you zoom out, we're just retesting a key liquidity zone as we're setting up order flow for the new year, but higher time frame still bearish. Volatility index still bearish as well. No, wages do not have more impact than that. All we saw with NFP data was a liquidity grab and then it ranged. Gold spiked up, then it came back down. Dollar spiked down, then it spiked back up. The main catalyst on Friday that led to that movement was very, very bad PMI and factory orders data from the US. Please watch this webinar slow and steady and watch it carefully, okay? So for the Asian session, London session, and pre-New York, up until Jerome Powell's speech, then it's dependent on that. We still want to play the dollar bearish sentiment. We still want to play the yen bearish sentiment. And we still want to play the weakness and volatility index, right? We're still seeing that there's majority of optimism in global stock markets except for Japan's stock market, but every other region from China, Australia, Eurozone, UK, and US 30 still relatively bullish in their stock markets. In terms of economic events overnight and tomorrow, pretty quiet up until Jerome Powell's speech. Through the Asian session today, in another hour from now, we have some inflation reporting from Japan, which can still keep the Japanese yen relatively weaker after liquidity grab, in my opinion. Other than that, over the London session, we don't really have anything going on. At 2:45 a.m. Eastern, we have industrial output data from France, which is expected to be optimistic, can still give some strength to euro in the short term over the London session. During our New York scalping session, during our North American trading session, the New York session, we don't have any economic data reports. But what we do have tomorrow during the North American trading session at 9 a.m. Eastern is Jerome Powell's speech. Okay? So Jerome Powell's speech is going to be talking about central bank independence, the central bank mandate, monetary policy, potentially going through a question and answer period where for the period of maybe 30 to 45 minutes, you're going to have a bunch of headlines from Jerome Powell. But from the Asian session, London and New York, not much economic data, not much going on overnight. So remember, these trade ideas are for Asian, London, and pre-New York. Then it's dependent on our boy Jay Powell. When I'm looking at gold, we're still very bullish in market structure and bullish fundamentals. We still have buyers printing these consecutive higher highs where these technicals were printed by real-world fundamental catalysts. The reason why gold went bullish here was extremely poor data. Now we're just seeing buyers print these new intraday highs. I would be looking at 3 potential buy areas based on retest points and continuations. 1, previous highs. 2, break above current highs. 3, deeper pullback to 1840s. In terms of intraday trade ideas, even scalps from these price points of interest. Currently, we still have weakness in the dollar. We still have more demand in other asset classes such as stock market and oil based on hopes of Fed pivot, strong bullish trend, bullish price action, and bullish market structure, new highs printed by buyers. Would prefer just to retest previous highs and still continue our bullish bias. When you're looking at some key price points of interest, I'd be looking at 1865, 1852, 1876, 1883 gold buys. This is for trade ideas before Jerome Powell's speech. Then, depending on Jerome Powell's statement, you're going to have the trade ideas that I stated to you at the start of this webinar. I'd only be looking for gold sells from a technical perspective and through movement overnight if we broke well below previous highs, canceled out the upside move, had a fundamental catalyst for dollar strength, and break below 36. Now, our dollar pairs, GBPUSD, EURUSD, and US 30 stock market index, and USDCAD as the inverse, are going to be very similar. On GBPUSD here, you can see we're still respecting this higher time frame pullback structure. We still have these highs printed by buyers. We're breaking out of this pullback phase, well above this consolidation zone. We had the fundamental catalyst. We had the fundamental catalyst of bad PMI last week and factory orders data, leading to Fed pivot prayer hopes and US dollar weakness. I'd be looking for pullbacks, retests of that order block, breaks above current highs, buys to target previous highs of 1.24. Continuing to play dollar weakness sentiment. And we do have some Bank of England speakers, but they should bring some more hawkish events individually. And GBPUSD wanted to freeze on me here. These key areas and price points of interest are based on historical price points on the yearly, quarterly, and monthly. These key levels don't change. I've been using the same key levels for like 2 to 3 years now. But anyways, on GBPUSD, if we can get a pullback to retest this breakout of the consolidation zone and double bottom at 1.21, hold of 2165, break above current resistance, I would still be looking to play dollar weakness sentiment, bullish price action, bullish intraday structure to target those previous highs into 1.24. What were the gold TPs? Take profits are dependent on your trading style. On the analysis I'm giving, you can take day trades, you can take scalps. Some people's day trades are 60 pips, some people go for 100 pips. Some people scalp 10 to 20 pips, some people scalp 30 pips. It's all dependent on your trading plan, your trading style, and what your risk management and goals are. But I'm not here to hold your hand through everything for free. You know what I mean? I'd only be looking for GBPUSD sells below 1.1985 key level, and we would need dollar strength and a fundamental reason for GBP weakness from a reactive standpoint, which so far to start out this new year, geopolitical tensions and any reactive headlines have been relatively quiet. We've more just been following data and what it's going to be telling us in terms of signals of the Federal Reserve monetary policy and other central bankers' monetary policy. Euro USD pullback. So Euro USD, very similar structure to GU, as obviously we have dollar movement as the main market driver there. Yo, what's going on with TradingView right now? Euro USD, Owanda. Sorry everybody, my TradingView is glitching out here. Okay, I can't give you guys the Euro USD trade ideas. For some reason, Euro USD has vanished off the face of the earth. Okay, well, there we go. All right, there we go. Yeah, well, what are we paying these fees for? Anyways, Euro USD is very similar to GU, except it's even more bullish in its intraday structure as we've had buyers extend into new highs. Very key liquidity zone here around 1.06 that I would like to remain above, with potential pullbacks into that liquidity zone and continuations above current rejection point. Still looking to play dollar weakness sentiment and Euro USD bullish market structure and bullish price action. Bringing that together for trade ideas of interest, I'd be looking for retests of 1.0654, new daily lower wick holds of 7.3, breaks above last intraday high 7.6 Euro USD buys. Remember, these are trade ideas for Asian, London, and pre-New York, dependent on if volumes are still healthy, as the main focus point is Jerome Powell's speech, where to continue any dollar weakness, aka gold upside, Euro USD upside, GU upside, and so forth, you will need to have a dovish to neutral Jerome Powell speech. If he starts to bring the hawks, I already told you how to adapt accordingly. Now, USDCAD is obviously more of the inverse, as your dollar is the primary in this trading quote. And you can see we've had a very key break of a key liquidity zone around 1.35, Tons of sell side liquidity generated from the 365 area. Very strong impulsive move of bearish price action. Potential further low targets down to 1.33. Dollar still weak, where if we have any pullbacks, I'm still expecting to dig into this 1.33 handle based on price action, market sentiment, and continuations of the Friday movement. Then it's going to be dependent on Jay Powell. When I'm looking at USDCAD, pullback retest to 348, retest of 34, and breaks below current low would still be USDCAD sells. Oil is starting to stabilize and pick up some bit of a relief rally as we have hopes of Fed pivot and dollar weakness. Dollar is still bearish individually. Nice strong bearish price action and market structure. US 30 stock market index. We're still having the, oh come on man, you can't even load this either. Apologies everybody, it's not my fault. I'm just trying to give you guys great information as fast as possible, but they want to slack on us today. TradingView wants to slack on us today. What the hell? My screen just went black. What the hell? Okay, we're good. What the fuck was that, man? TradingView's glitch. TradingView almost crashed my shit. Okay. Now, no, we're back. We're back. We're back. They're trying to keep your boy down. First stream of the new year. As long as US stock market from a technical perspective is still holding above 32,800, and even better if we just hold above 33,200, and we still have dollar weakness, volatility index more bearish, we still have potential that we can continue this rally into these same intraday highs. And I'm still going to be looking for some US 30 buys for Asian session, London session, and pre-New York. Then, of course, it's going to be dependent on Jerome Powell's speech. $33,400, $33K, $34K, US 30 buys. Make sure you guys watch this whole entire webinar so you understand what we're talking about, the fundamentals, the economic events in focus, the what we're focusing on for the rest of the week. I gave you guys projections for the rest of the week as well, right? I can only sell overnight or through the London session and pre-New York if we break below 32.5. Last but not least, GBPJPY. So we still have Japanese yen bearish on the higher time frames, and fundamentally with the Bank of Japan still keeping interest rates in the negative, unlimited bond buying program going. And of course the Bank of England still keeping interest rates up and doing more rate hikes. We have nice intraday bullish market structure forming, buyers printing higher highs, higher time frame still bullish as well. Pullbacks to 160.2, breaks above 160.8, breaks above 161 would still be buys. No, the volatility index does not have a direct one-to-one correlation with the dollar. The volatility index measures fear within the US stock market, more specifically the S&P 500. Whenever there's massive amounts of short selling in the S&P 500 or massive amounts of buyers exiting positions in the S&P 500, the volatility index goes bullish. The reason why this is seen as a fear indicator is because the stock market isn't supposed to be bearish. If there's massive panic selling in the stock market, that means something is wrong. Hence the VIX pushes up bullish, indicating fear. I would only be looking for GJ sells below 159.5. All right, everybody. So We went through key fundamentals in focus. We went through the key events this week. We went through projections on the higher time frame, what to look out for data with Jerome Powell and the CPI, potential scenarios for that. We went through what other economic events we have overnight and through the next coming sessions. Trade ideas based on fundamentals and technicals through the coming sessions. We have preset expectations that if markets range until Jerome Powell's speech, we won't be surprised. Trade ideas shared on gold, GBPUSD, EURUSD, USDCAD, US30, and GBPJPY. Fundamentals, technicals, psychology reminders, volume readings, and everything else in between. All right. Now we're going to be announcing that $1,000 Dominion USD account winner. Yeah, you can always rewatch this as you wish. These webinars are always saved to the YouTube channel right after. All right, so for those of you who don't know, I did a New Year, New Me giveaway on Instagram. Here. I did this New Year, New Me giveaway. $1,000 USD account giveaway on Dominion markets. You must have a valid account on Dominion markets. You must have a live account that I can deposit into, which I've already transferred the money to do that, right? You must have followed these steps as well. So we're just going to use this website called fucking giveaway pick here. I'm going to put the link in of that Instagram, of the Instagram post we're going to show. All right, so we have 319 comments, 381 likes. Duplicate number of winners 1, number of substitute winners, I can only put 1 here. Duplicate comments count more than, no. For anybody that was spam commenting on the post thinking you're going to get an easier title, go fuck yourself. We're going to make it fair. 1 entry per member, or per person. So if you were spamming 100 comments on the post, I hope you lose, to be honest. I hope you lose. We're going to make sure that you participated, tag doesn't matter, and that you at least follow Capital Hungry. Prepare the giveaway. It's collecting all the information from the comments. All right. So what should I click? Manual select or auto select? It's going through the comments and usernames right there. You see it in your screen, right? Let's just do auto select. I'm going to click auto select. Fucking take it forever, no? Okay, Mr. X Guido Benitez. And if he can't win, this is going to be the substitute winner. Winner, winner, chicken dinner, IG at this. And if he doesn't have a valid account, on Dominion Markets, then Mr. Ronan, you will be the winner. If Guido fails. All right, everybody. So we got this guy, Mr. Guido Benitez. I'll contact him on IG and see if he has a valid account and followed all the steps. Actually, let me check if he posted it to. Let me check something quickly first. Let me check something. He's not the. Wait. Not yet. I gotta see if he posted anything, if he reposted anything. X, how do I spell this, guys? X Guido Benitez. All right, ready? Oh, he did mention me. Oh, no. I don't think this guy ever mentioned him in the story. He never mentioned Capital Hungry in the story. Now let's check Ronin. Ronin 24. Ronin 24 FX. Huh? Oh, Ronin's the winner. Ronin followed all the steps. The winner is this guy, Ronin. This guy never followed the steps. He only commented, but he never reposted. The winner is Mr. Ronin 24FX. Winner, winner, chicken dinner. Official winner. Official winner. Official winner is Mr. Ronin. Mr. Ronin commented on the post. He liked the post. He reposted it on his social media here, you can see. He shouted out Capital Hungry. And hopefully you have a valid Dominion Markets live account. I'm going to message you right now. You are the winner. Send me your Dominion account live number. I just messaged you, Mr. Ronin. And you're messaging me back already. All right, everybody. So hopefully you guys enjoyed this webinar. For anybody that's new here, I'm going to be looking to do a giveaway from $500 to $1,000 every month or couple of months. All right? Okay? Stay tuned on Twitter. Follow the Capital Hungry Twitter, Telegram, and IG as I do giveaways on those platforms like every month, every couple of weeks. Yo, over the month from November to this new year, I've given away $6,000 already. I've given away like 10 magic keys, $1,000 over PayPal, $1,000 over PayPal, this $1,000 giveaway. You know what I mean? I'm not trying to brag. I make pretty good money trading and with my business and other investments I have as well. So I don't mind giving back. Plus it also helps grow Capital Hungry's exposure where everybody shares the giveaways and shit, right? I'm not doing it from the goodness of my heart. I'm doing it to advertise Capital Hungry, but you get to benefit by potentially winning something. You know, I'll always be honest with you guys. I'm trying to do it to grow Capital Hungry. I don't know if you guys know, all of my social media is shadow banned because I always posted about COVID, government corruption, about anti-LGBTQ transgender nonsense, about pushing masculinity and making men stronger, about consuming less social media and being a stronger man or woman mentally, physically, and financially. So because I've been talking about all that stuff for years, a lot of my shit's shadow banned, you know what I mean? Oh, you like the hoodie? It's Madra Uchiha on a Nike swoosh. Custom print. Just like 2 bills, baby. It's custom made for me. It's Madra sitting on a Nike swoosh. I don't know if you can fucking see that. He's just sitting there chilling like me. You know what I mean? But anyways, this is going to be saved and uploaded. You can watch this whenever you want. And if you guys enjoy this content, make sure you like, make sure you subscribe, comment, share it around. All the things to help the channel grow for Capital Hungry are free for all of you to do. You know what I mean? Free to like, free to share it on your social media, free to share it around, free to comment. But yeah, I'll see you guys next time. Yeah, if you guys want, do you guys want, last thing before I go. Do you guys want me to do an Instagram live on Friday? Question and answer? Like a 30-40 minute Instagram live on Friday? At the end of the week for question and answers? Whatever people ask, I'll answer it. You know what I mean? What time is it right now? I have to go by 6 p.m. soon. I have to go soon, guys. I have to get out of here anyways. Okay, everybody. Take care. Have a great day. Have a great week.